It's all about getting tight setups. Get a tight stop so you can get potential good risk reward trades. This is what I'm talking about. Small tight stops to get multiples on that. My average is 29.06 and my stop is 28.91, so that's like 15-cent stop, and I'm up $1.50 on it pretty much. Already I'm up 10 times my initial risk on this UXY. And this is what trading is all about. Get multiples on your risk.
Dan Sanger trades a certain type of setups, very simple setups, but you have to understand it doesn't trade random stocks. To me, something like SWKS looks very random. That's the difference. Like anyone can learn some easy chart patterns, but what you really have to learn are stocks that don't look random. Yeah, but look at this SWKS. Look at it every time. Okay, it takes out this range, but look at this. It's all over the place. And look at the recent trading history. Like it doesn't have clean breakouts. It goes up a little, then pulls back, has a sharp decline. Then it kind of grinds higher again. It's a very random stock compared to something like the ones that I'm long. Look at AMAT. Look at how clean it is. It broke out of here. Look at the clean move it made. Right? Look at how clean moves it makes. You know, it serves the 10 and 20 or at LRCX. The same thing. It's much cleaner versus this SWKS. It's all over the place. Look at this thing. It goes up for 2 days, slams back down. Goes up for a few days, slams back down. It has no clean trends. It's a very random stock. And, you know, you need to be able to identify randomness versus something where you have an edge in a split of a second. Like anyone can draw these lines. Oh, look, higher lows align. But it's not that easy, guys. It's not that easy. It needs to be something special. I'm just saying, try to get randomness out of your trading. It's not that easy. Just look at chart patterns and you'll be a millionaire. It's not that easy.
Don't get emotional. That's when big, bad things happen. If things were shit for you today, things can get worse. And even also if things were really good, don't do anything crazy because you can turn it to shit just by being emotional. If you followed your rules, like anytime you feel fearful or euphoric, that's when it's nothing wrong with sizing down or closing out stuff, because you're not trading on an edge anymore. You're trading on emotions, and that's not a good thing. The market is gonna go away and you're never gonna make any money again or get any setups again. I think that's the problem with a lot of people who are having issues taking losses. They feel like there's not going to be another trade around the corner, but you gotta get out of that mindset. Like there's always another trade around the corner, always. All of you should really invest in yourself. If you want to make millions, you really need to put in the work, okay? You can't sit there and trust on, follow other people. It's fine to ask for advice. I'm not pointing anyone out. I'm just saying general. You should go back, like what I did. I went to TC2000. This is 6 years ago, 7 years ago, when I started my big market research project. I looked at all US stocks. I went through all of these stocks, just looked at the monthly charts, went back as far as I could, looked at all the big moves, like every stock that went up a few 100% in a short amount of time, or thousands of percent over a period of years. I just put them in a different watch list, and then I went through. I looked at price action. I looked at the news. I looked at the earnings. Let's look at Microsoft, right? Looking, okay, so stock in the 90s, 80s went from 10 cents to $51, $53. That's a $52,000 move. What the hell makes a stock go up 52,000% over 13 years? You know what? Earnings and revenue growth. Boom. Domino's Pizza, right? This thing went from $2 to $400 in 11 years. 16,000%. Why? Earnings and revenue growth. And I started seeing these patterns. It's the same patterns occurring over and over and over again. There's really no rocket science involved to make millions in the market. All you have to do is learn the setups, patiently wait for them, not do much when the market conditions are not correct, not well, like when there are no setups, you don't trade much. You want to make millions, you gotta work for it. And once you get it, once you really get it, you're gonna make so much money, you don't know what to do with it. I promise you this, guys. I started with 5,000 first time I started in 2010, 2011. I blew up 4 times in the first 2 years. And now in the past 2.5 months, I'm up 6 million. Pretty much third or pretty much 40% of all the money I made in the markets I made in the past 2.5 months. That's compounding.
Successful trading, it's more about cutting away all the useless things you ever learned and heard. Because most of the things people learn about the financial markets, useless. Totally useless. If you can unlearn those things, you're on the right path. And the more useless things you can unlearn, you can become incredibly wealthy. Yeah, exactly. You listen to these guys, Druckenmiller, David Tepper, Paul Tudor Jones, and they almost never use any of these stupid phrases. And these guys are legit, you know, they have great track records for long term. They're filthy rich. So who do you want to emulate your trading after? Some random schmuck on social media who probably trades a $500 account, uses all these fancy words, maybe also selling a service, or these legit people.
There's always a reason for a move. If you can learn to identify the moves beforehand, you don't need to know the reason for the move. Trust me on that one. Cut the noise. I mean, look, you can make money focusing on a lot of things, but you won't make really big money unless you cut out 99% of the noise. Focus on very, very few things. That's when you will start making exponential returns. Trust me on that one. How hard for the first 30K? Super hard. Well, everything is hard. No matter amount, everything is hard if you don't know how to trade. Once you learn how to trade, you won't ever have a small account again. And this is the hardest thing to do. Sit and do nothing. That's your edge. Now, in a market like this, doing things outside of the market when the conditions are not favorable, that's an edge. This is not the time to look at the markets. You should be studying setups right now. Forget about what the stocks are doing right now. There's nothing there right now. Unless you're short, there's nothing there out there. It's dead man's land. There's no edge on the long side. Remember, guys, the key to big money is not trading all the time. It's trading right and then waiting.
Cheap BRE. I don't know why you bought it here. Here was a decent setup. This is where it broke out. Not here. This is kind of setup you buy if you don't want to make it in trading. This is where it broke out. Okay, broke out of a tight range. Had a tight range day before. This was the range breakout. This is a chaser breakout.
They occurred 10 years ago. They occurred 50 years ago. They occurred 100 years ago. And I have the proof because I've done my research. For some reason, people don't do their research. They just keep trading and doing these random things. Like, I realized after the first year or two, I did these random things. I followed other traders, but thankfully I realized, like, I need to figure out how stocks move. I need to go back historically, look at thousands of charts, get a feel for what do stocks move on? How do they move? I'm still working on it. I've done it for 7 years now. Most people are not willing to do that. They do a bunch of random stuff and they get a bunch of random results.
It's not a discipline problem, it's a confidence problem. Discipline is the most overused word in trading. It's never a discipline problem, it's a confidence problem because you haven't put in enough effort to build your confidence. If you study enough examples of a certain breakout or a certain setup, you will build confidence. Guys, how many of you have spent 500 hours studying one specific setup? Thousands of historical examples. Be honest. There's maybe, I don't know, 5% of you. The rest of you haven't put in any effort to build confidence. And that's why these things happen. You have no confidence holding for a big move. You get shaken out on one downtick. These things happen all the time. You have no confidence because you haven't built it. Yeah, you gotta combine studying and trading. Well, what do most people do? All they do is putting on some random trades because they haven't internalized the setups yet. They all do these random things. They promise to use the 10-day moving average as a trailing stop, and then one downtick happens and they're out. We see it daily, people who are struggling to follow the rules. Happens to me too. But it happens less. You gotta do both. You gotta study hard, out-study most people. And you gotta combine it with experience. If you do make no trades and just, focus on theory, you're not gonna be successful. But most people have the other problem. They do no studying and they just do some random things and then they, join these types of things, Twitch streams and trading services and hope for handouts. I was like that too. For too many years. I could have been profitable easy a year earlier if I hadn't been a lazy fuck.
7th of April. Like, what do you see here? Is there a setup here? Does this look remotely anything like I teach? And again, it comes down to very simple things. For most of the people so far I've done their struggling trader review, they don't have a basic concept of a good setup. And it's very simple to fix that. It just takes a little bit of time. For this guy too, I would RJB 55. You probably should stop trading right now, because at this rate you're gonna blow up soon. And you should review what's a good setup. This is why you follow your sell rules. The first close below the 10-day, that's where I sold it, and now look at it. It's down another 55%. That's why you need specific rules. You know, you can't trade blind. You need rules. If you want to make millions, you need rules. If you're gonna swing trade, you need to aim at least 1 to 10 risk reward. You know, if you're aiming for 1 to 3, 1 to 5, like a lot of day traders are, it's just not gonna cut it if you're swing trading. You need small losers and big winners. Small losers, big winners. Alright guys, have a great long weekend. I expect you all go through a couple of 100 stocks as far back as they have trading history. That's your homework over the weekend. Again, if you want to make it in this business, you gotta put in the work. You have to memorize 1,000 charts this weekend. Yep. If you're gonna spend the weekend chilling, you're doing it wrong. I'm sorry, but if you really, I'm telling you guys, if you want to make it in this business, you gotta put in the work. That's where you gotta be in the markets. Like, you can't go away because, you know, things are not following through, because you never know when, you know, things start working again. You gotta be there. You know, you gotta be there. The market doesn't trade on your schedule or on your feelings. You know, you gotta be there when the market is ready, not when you are ready. Broken momentum stock, there's nothing here. Bought it here, sold here, nothing here. Bad setup. I'm gonna show you a good setup was on SPWR. This was a good setup. Clean range break. This was a good setup. Clean range break. Was it this one I traded and sold it because I didn't follow my sell rules? I think so. This was a good setup. Clean break, like clean flag break, because something buying, you know, down here. I mean, it looks like shit. Where's your edge? Like, there's nothing there. WTI. Again, you know, just a random broken stock. You know, the 20-day was declining, the 10-day was declining. It's just random update. If you keep buying random stuff, you're gonna blow up. Bought the breakout at 984. I assume it's this day here. You bought it at where? 984? You bought it on this day here? Where's the breakout? There's no breakout here. If you really love this stock, this would have been the entry day, and even this was maybe a 3-star setup at most. This is, what the hell is this? No. This is not a setup. You really need to spend time on setups. This is not a good setup. This is if you want to blow up. That's a good setup if you want to blow up.
Aram, 14th. Dude, let the 10-day, chill out with it. Don't buy these random, you know, updates on a momentum stock. You're gonna blow up. Stop doing it. This is not a good setup. Let the range develop. Let the 10-day come, you know, catch up. Like I said before, if you can't draw a triangle, there's no setup. There's no setup. Now it would be, you know, something maybe for tomorrow. Right now it's built some range. Found support on a rising 10, and ideal if we can go sideways a few more days.
And then I look at the numbers in MarketSmith, like where I get these numbers. I look at like /62. That means they lost money, but they're growing their revenues by 62% year over year in the last quarter. I'll show you here. So here, that's where I got the /62. Now, if the number here, if this 113 would have been here instead, the number here would be 113/62. And these numbers I get from the fly on the wall. I'll show you. So I use 2 news services, briefing.com and the fly on the wall. So where is the earnings? Let's see here. What was the earnings date? 2nd of August. So it's here. So here is where I got those numbers from reports. Q2 EPS -6 cents, consensus -8, blah blah blah, and raises revenue, blah blah blah. This is where I got this from. And I also use briefing because sometimes they don't show up in the fly on the wall, so briefing is sometimes better. But I don't like the reporting format of briefing, so I try to use. So this is briefing.com. So I pay for both of these services, and I use them. 95% is the earnings I use them for. Well, I'm combining, like I'm scanning for strong stocks, strong momentum stocks, and then I can look up the numbers very quickly, like analyst estimates, stuff like that in MarketSmith. Because the best ones that work best for me over the years are stocks that have big estimates. Like look at something like Shopify, like big growth and big estimates, like this thing. Look at the growth, huge revenue, huge EPS growth, and big estimates for this year, next year. And look at the movie, stock is gone up 15 times the past 3 years. So I like to combine fundamentals and momentum.
You can create a setup around anything, but to make tens of millions, you only need to focus on one setup and master that one setup. My job is to make you guys focus, not to jump from method to method, doing this, doing that. How do you know what setup? That's why you need to, like I say it on every stream, you need to spend a few thousand hours studying stocks, studying past moves, and see how they move. You can probably find 2, 3, 4 setups very easily. And then you only need to master one of them to make tens of millions. What's the name of the setup? The name of the setup, if you put in the work, you'll make tens of millions. That's the name of the setup. Trading is hard. It's the hardest thing you'll ever do, or one of the hardest things. Trading itself is not hard. Trading successfully is hard. Trading is very easy. Just open a brokerage account and you start buying and selling. It's the easiest thing ever. There's absolutely no threshold. Just get into it. Boom, you're a trader. But profitable trading, that's another thing. Especially trading without the process and without the setup, that's the most frustrating thing ever.
If you want it enough, then you want it enough. Like, people contact me, people write to me all the time, people who don't want it enough. I usually just ignore them because I find these people annoying, even though they can be really nice. Someone DM'd me on Twitter yesterday like, oh, I signed up to Pradeep's site, but there's so much, what was in the tutorial or whatever. I was bitching, whining, moaning, there was too much content. I'm like, are you fucking kidding me? When I found Pradeep, I went through every single, that was like in 2012 or something. So he has a free blog where he has posted since like 2005 or something. I went through every single post. Then I signed up to his paid site. I went through every single post he made since inception, which was like 6 years or something. When I found Minervini, I read his books, signed up to his paid site. I went through every single tweet he has tweeted and looked for setups, looked for his entries, look at the setups he posted. When I found Dan Sanger, signed up to his paid site, went through every single newsletter. He has newsletters like twice per week or something like that with setups. I went through every single newsletter till inception, like late 90s, okay? Trying to understand his method, trying to understand how he trades, what he trades, all of these things. Trying to understand everything about his method. When someone writes to me, hey, oh, I signed up to this site, there's so much content, I don't know where to begin. Shut the fuck up. I'm so close to fucking blocking you. That's what I think about all these bitches, whiners, moaners, asking for shortcuts. Can I guide you in the right direction? Sure. Follow the link on the screen. But there is no substitute for going in depth and studying different traders and different methods. You have to go in depth. You can't just spend 5 minutes at, oh, okay, no, this is not for me. That's how you learn. That's how you get an understanding for the market. It's different structures that occur over and over again in the markets.
But that's how it is being a swing position trader. I've been doing this for many years now, and it works for me. It's not for anyone. If you would look at my trading journal right now, it's mostly a sea of red, and then there's a big winners here and there, but it's mostly like small losing trades. My win rate is maybe, I don't know, 30% or so. It's fine because the winners I have, they're like 10, 20, sometimes 50 times my initial risk. Extremely slow open right now. And this is what trading is all about. It's just 95% boredom. Unless you're day trading or even scalping, then you have always something to do. But if you want to make millions, and especially if you want to make millions in a short amount of time, then you need to have patience and wait for a few times per year when the market has big rallies. The rest of the time it's just all about waiting. Trading, I've been, like slightly depressed most of my trading career. Because everything feels so dark when the trading is not well. Like even in my real life. So trading is not a great profession for mental health. I don't think it is. You really have to be special to make it in trading, to be honest. I think that's why most people don't make it. They just can't handle feeling like shit all the time. Because it does, if you're in a bad period in trading, you're losing real money. That kind of, it's not like a real job. You make, you can hate your job, you're gonna still get that paycheck at the end of the month, right? You don't have to worry about the money. But in trading, you know, it's different. Yeah, no, you're not alone. We are all in the same boat. We can all be miserable in the same boat.
Yeah, look at these uranium names bouncing back today. So strong. And look at the moving average they're surfing. The 10 and 20. The 10 and 20. 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 You should like repeat. Everyone should repeat when they for yourselves when you wake up in the morning, like 10 and 20, 10 and 20, 10 and 20. And you're gonna outperform 99% of market participants year in, year out. You're gonna outperform all these guys using Boomerberg terminals and, you know, whatnot. 10 and 20, 10 and 20. Yeah, Buffett uses the 10 and 20 decade moving average. Yeah, Buffett uses the 10 and 20 yearly moving average. Look at how Berkshire has surfed the 10 yearly moving average. That's what Buffett uses. Like, look at like some of his holdings. He's in Coke, right? Look at this, 10 and 20. He's also in American Express. Look at this, 10 and 20. That's his secret sauce.
And same with Roku. I bought it on opening range highs. I don't know exactly where it was, but I don't think I risked more than maybe $2 on it, and it ran up $100. So I must admit, I was probably up like 40, 50 times my initial risk. So you don't even need to take like huge amount of size to make big money on these guys. If you catch something like this, you don't need to make a lot of risk, because if you risk like say 0.5% of your account on a trade, and it goes up 30 times your risk, you know, you're up 15% overall. Now I usually scale out into strength, but you know, you get the point. You catch a few big movers like this per year, you know, after not that many years, you don't have to work a day in your life. It doesn't take that many years. Extremely slow open right now. And this is what trading is all about. It's just 95% boredom. Unless you're day trading or even scalping, then you have always something to do. But if you want to make millions, and especially if you want to make millions in a short amount of time, then you need to have patience and wait for a few times per year when the market has big rallies. The rest of the time, it's just all about waiting.
The best way for me to find these stocks showing bounce opportunities? Well, you wait for them to stop going down, and then you kind of look for some type of reversal candles or ranges to the upside. And sometimes you're looking at something like SC, for example. It's like, you know, there's no obvious support on the daily, and that's why you kind of look at the weekly and monthly, and you see monthly it almost kind of hit the 50. And you can see it with a lot of these beaten down past leaders over the past 2-3 years. They're all kind of bouncing off either the 50 or the 20 weekly. For example, Hubs, which I bought yesterday, undercut the 20 and tried to kind of bounce, you know, trying to reclaim. And all of these other stocks, you know, TTD, Twilio, they're all either kind of trying to bounce off the 50 or the 20 monthly, even though there's no support. So you kind of look at those types of levels, and then you look at the candles, right? Are they bouncing? But they don't have to bounce. Like, they can all go down another 30%. None of these stocks have to bounce, but I think yesterday was a good risk reward type of an opportunity.
1% is a lot of risk. If you have 10 losing trades in a row, you're gonna lose 10% of your account. If you have like 10 winning trades in a row where you make 10, 20 times your initial risk, you're gonna double your account. 1% risk is a lot of risk. Yeah, I'm not talking about the position size. I'm talking about the risk on the trade. Like, your position sizes, they should be like 10 to 20% of your account. I'm talking about the risk on a trade, not the position size.
It was a great trade I had. Buy at the gapper, same playbook as always, buy the opening range highs, and more than doubled in just like a month. Big trade. Extremely liquid. Look at how many shares it traded this day. 163 million. It went from trading a few million shares per day to trading 163 million shares in one day. It's crazy. I think one of my better trades last year. You don't get many per year, but if you can get like a few on decent size, you don't need much more. That can pay for 100 small losers. A trade like that. One trade like that pays for 100 small losers.
The only way you learn is the hard way. You will never learn trading from a book. You can get trading ideas from a book, trading concepts from a book. But the only way you learn is to learn the lessons from yourself, from the pain of doing the wrong thing, from taking a loss or not taking a loss, from missing out, or, you know, all of these things. They're very painful, all of them. And it's only from the pain that you can learn. You just have to learn the patterns. It's the same patterns occurring over and over again. You have to look at thousands of charts. Everyone should do what I've been telling you guys to do for weeks and months. Go through thousands of charts, thousands of stocks and just look at the charts. Go back to the 90s, 80s even for those stocks that have data. You'll see it's the same patterns over and over again. It's just so easy once you get it. It's super simple. Okay, it's not easy, it's hard. Trading is hard, but it's simple. You just have to learn the patterns and read the price action and listen to the market.
Yes, I hold through earnings. Yes, yep, I do. If I have a good profit cushion, I hold through. Like EMPH, I bought it on this earnings breakout here, and I held through it. This was another earnings breakout. I was long during that. Roku, the same thing. Had an earnings breakout, and I held long during this earnings breakout. But these are like extreme winning examples. Of course, this thing could have gapped down and stopped me out, right? But yes, I do hold through earnings. If I have a good profit cushion, that is.
Can you describe your ideal market condition for your setups? Yes, a bull market with very little volatility. An uptrending market with little volatility and good breadth, like where a lot of stocks go up. Not that I trade a lot of stocks, but the good breadth is very nice to have. Like an ideal market, if you look at indices, you want a market that's look like this. Goes up, up, up with very shallow drawdowns, or like we had during the first half of this year, and also like market like late 2016 to early 2018 or late 2017, just keeps going higher or sideways, higher, sideways, higher, sideways, very little volatility. That's an ideal market, because in a market like that, you can be like 150% long, and you really don't have to do anything. You get long on good setups, and then you can just sit and wait for months. And every day you're making money, pretty much. These are market conditions you can make or where I have made millions in a relatively short amount of time. And more importantly, you don't have to work hard for it. Things just work. You buy a stock, it just keeps going higher. Not like a market we are in right now. I just keep taking these small losers. Nothing works. Or if I get into something that works, like Roku, it shakes me out. Like, what the fuck? Like, I can't get anything going.
Not sure if I understand this one. 7th of April. I mean, like, what do you see here? Is there a setup here? Does this look remotely anything like I teach? And again, it comes down to very simple things. For most of the people so far I've done their struggling trader review, they don't have a basic concept of a good setup. And it's very simple to fix that. It just takes a little bit of time. And for this guy too, RJB 55.5. You probably should stop trading right now, because at this rate you're gonna blow up soon. And you should review what's a good setup. If the stock can double, it can double again. Yeah, absolutely. Past momentum is a very good indicator of new momentum. That's why these stocks that you guys have been mentioning, like XLNX and some of these other semi-names that were mentioned, like these things, look at how choppy these things are. There's no momentum here. It's just a random stock doing a random thing. And like Taiwan Semiconductor Manufacturing, another one, it's just super choppy, doesn't have a lot of momentum. Stick to the momentum leaders. If you want to make big money in the markets, you have to stick to the momentum leaders. You have to stick to the best ones. You can't sit there and trade second and third rate stocks.
What's my read on CCK? Well, they are gapped up on earnings yesterday, but I mean, I don't think there's anything there. There are hundreds of stocks that are better to trade. Can it go higher over the long term? Yeah, but this is a slow-moving, mature business. This is not really... I mean, just look at the weekly chart. It's a super choppy stock. This is not a trading stock. You probably shouldn't even look at it. That's what I think on CCK. It's not the type of stock you're gonna make big money on. Let's just say that. You want to trade high beta. And I will see you on Monday, and we do it all over again. We do this all over again. Trading doesn't have to be complicated. Just these simple things that you do over and over again, and the money will compound with long periods of extreme boredom in between. That's trading in a nutshell.
Those flags are so short. Oh, sure. Things that have these explosive moves, you don't need a multi-week flag. Like this thing went up like, it went up 1,000% in 2 days. Then it pulled back, and this flag was what? 5 sessions? That's more than enough. And this flag was only like a couple of weeks, 2 weeks maybe. I mean, for something that moves this explosive, you don't need multi-week, multi-month flags. Explosive names, explosive instruments, they usually don't flag. You're not gonna wait around.
The key to making money is not losing your money. That's it. Making money is easy. Avoiding losing money is much harder. It's very easy to, like, identifying good setups, especially in a bullish market, it's the easiest thing. That's the easiest thing. It really is. That's the easiest part of trading. You always buy on a breakout. I pretty much never anticipate any moves. As soon as they start moving, that's when I buy. And sometimes I add once they confirm. It's not like, you know, like Tesla, I think it's a great setup. It's not like I'm buying it here in anticipation of a potential breakout over like yesterday's highs. No, I would never do that. I want this thing to actually start breaking out. I want the stock to tell me it wants to go higher. I don't want it to tease me. I'm gonna wait for the stock to tell me, hey, I'm ready now. That's when I want to buy it.
Oh my god, ACAT, so strong. This is how a good breakout looks like. Just goes. You feel like you chased it, and then it just keeps going higher on big volume. Or at least on decent volume. This thing definitely has above average volume. This is what a good breakout looks like. This is an erection. This is an erection candle. Compared to this MIK that had an erection candle, but then it just kind of faded off. And now it's below my entry. But it could still work. It doesn't matter. Like, as long as it doesn't stop me out. This thing could very easily work, but I prefer the ones that don't fade back, obviously.
3 setups that occur over and over and over again. They occurred 10 years ago, they occurred 50 years ago, they occurred 100 years ago. And I have the proof, because I've done my research. For some reason, people don't do their research. They just keep trading and doing these random things. And like, I realized, like, after the first year or two, I did these random things. I followed other traders, but thankfully I realized, like, I need to figure out how stocks move. I need to go back historically, look at thousands of charts, and actually get a feel for what do stocks move on? How do they move? And I'm still working on it. I've done it for 7 years now. Most people are not willing to do that. They do a bunch of random stuff and they get a bunch of random results. If you want to make money in the stock market, you need to get the randomness out of it. There's always going to be random stocks doing random moves. You want something predictable, something that works over and over and over again. That's how you make big money. That's how you become the 1 or 2 or 3% to actually make it in this business, instead of being another statistic. Use good scanners to check for volume. I don't have any. Focus on setups. Focus on stocks that are liquid enough, and you won't have to worry about volume. Volume is for losers. It's the setup quality that matters. The only time I look at volume on a specific thing is on episodic pivots. Those are the only volume dependent trades. You want to see very lot above average volume very early. Breakouts, it doesn't matter. If you have a liquid stock, it's gonna be liquid no matter what. It doesn't matter. And many times on breakouts, the volume comes in after you're supposed to buy it. If you wait for volume confirmation on breakouts, you're doing it wrong.
Numbers look good. They've been growing for about 30% about 30% per year for the past 3-4 years. This now. They were losing money in 2012, 2013. I'm gonna show you guys. They were losing money, and in 2015 they turned profitable, and they've gone from pretty much losing 7 cents to making an estimated of 429 next year. And the stock has responded, and it was almost a 10 bagger at one point. Now it's obviously pulled back a little bit the past few months. So this is what happens when a stock grows over a long period of time. This is how the price responds. Twitter gapping down. Whoa. They had great growth last quarter. And now, not so much. Yeah, decelerating. I'm gonna take this off. Twitter is not the type of growth stock I'm looking for anymore. So I'm taking it off my watch lists. It just cannot make money. Or they can make a little bit of money, but I'm gonna show you guys. This is not what you want to see. They're expected to make 53% less money next year compared to this year. And this is why the stock is going down. in pre-market. Growth estimates are extremely important since the market is a forward-looking mechanism. They missed on both EPS and revenues. That is so bad. Holy shit. Wow. And yeah, the numbers on Twitter are not good. Not good at all. Oh really? This is a slow-moving, 13 and 7. This is not for me. It's more of an investing type of stock. But and another one is it's made a huge move since the 2009 bottom. I'm gonna show you guys. Every year they've been growing about I don't know, around 20% per year ish. And this is what the stock looks like. Up 1500% from the 2008 low. Big move. Very choppy earnings. I'm gonna show you guys. This is how it looks like. There's no real trend. Like they have a good quarter, they have a bad quarter, they have a quarter where they grow a lot, then they lose a lot, and they grow a lot, and it's just there are no real trends in this thing. This is why the stock has gone sideways for so many years. Look at the earnings. They haven't gone anywhere. They have a profitable year, they have a losing year, profitable year, losing year. And the stock has been going sideways for the past 8 years. Not a great company. Microsoft, well, this is a very slow grower, slow and steady. One of the biggest stock market winners. Since 1986, this thing is up 100,000%. That's amazing. Really amazing stock. So 2114, yeah. Decent steady growth. I'm gonna show you guys how consistently it grows. This is how a diversified company looks like. Look at how consistent these numbers are. Just consistently growing 15-ish% per year. 15, 20, year after year after year after year. Super consistent. So this is also more of an investing type of stock, not a trading type. A line reported. Oh, okay, yeah. So this thing has gone from a growth stock to a not a growth stock. Look at the 2016, 2017 when it went up a lot. It grew earnings about 20 to 85% per quarter and revenue about 30-35% per quarter. Here it grew earnings 100% and revenue 44%. So this was a great growth stock 2016 to 2018. And now they have zero growth. Revenue is still growing, but the EPS are actually declining lately a little bit. And the estimates are, let's see, 19 plus 5% and 20 plus 23%. So there's nothing here for me.
Where did you buy it? Here? I'm not sure what you saw here. Yeah, I mean, sometimes it's just best to wait for a breakout. Like, okay, I get it, it's a momentum stock, had a little bit of a flag, but where did you buy it? 808. You kind of anticipated a breakout. And you know what I think about anticipating breakouts. I'm not a fan. See, where did you buy it? You bought it here? Okay, you anticipated a breakout that never happened. Okay. Again, like I personally don't like anticipation because the fail rate is so much higher. TCAT, you bought it here? I don't see anything there. Saw a potential little breakout on the 60-minute. This is what you saw. Again, you're kind of anticipating a move that you think is gonna happen, but that's the thing, you know. I don't, you know what I think about anticipation. That's what it comes down to. Less anticipation, more actual breakouts. There were a lot of, you know, anticipation breakouts just failed. A lot of losses that could have been avoided if you just waited for a breakout, because, you know, those breakouts never happened. Again, so he bought it here, here. Okay, so he anticipated a breakout, okay, because this stock barely took out the previous day's highs. Like, it was an okay setup, like, before it totally failed and went down. Like, I can see it, like, I can see what, you know, not bad. He kind of anticipated it. You don't have to be the first one in. Sometimes it's better to just wait for the stock to, you know, actually have a little bit of upticks before you enter. See, Citibank, 12th of April. Again, like, this is like an like the setup itself was decent. So the entry was here. We pretty much anticipated a breakout that didn't happen. So he got stopped out the next day.
9th of April. Wait for the breakout. Like, I see what you saw here. You gotta wait for the breakout. You need the stock to prove itself. Otherwise, you're gonna wait for something that may never happen. No, the 11. What are you doing? What? Why did you buy it on this day here? You anticipated? This is why you don't anticipate stuff. And why do you buy it? There's no setup there. And it's not surfing the 20 day, it's surfing the 10 day. Dude, what the hell, man? No. Big no. Look at the wideness of the previous day. This is not a setup. It didn't even break the previous day's highs. Never even had a breakout. Why are you anticipating these breakouts that never happened? Don't anticipate. Guys, if you're gonna anticipate, it really needs to be something special. And you know, if you haven't made like a few million in trading yet, you don't know what's really special. So don't anticipate. BCTX 578. Again, you're kind of anticipating things. You bought it before it even took out the previous day's highs. There's no need to do it. I mean, no, don't do it. Stop with this anticipation bullshit. The correct entry would have been around in the 6 area, low 6s maybe. I would say 6 area. Once it took out the highs of the intraday highs. Wait, you entered the 11th? Why did you enter the 11th? The 12th, this day was the entry. 14th, this was the entry day. The 11th, I think you anticipated it a little bit. You got bailed out on this anticipation. Let's see, 15th. No, 14th? Again, you're anticipating stuff. You're anticipating, you know, you got bailed out on this one.
You bought it on this day here? Where's the breakout? There's no breakout here. If you really love this stock, this would have been the entry day, and even this was maybe a 3-star setup at most. This is, what the hell is this? No. This is not a setup. You really need to spend time on setups. You really need to, like, you can start with my swing trading school. Like, this is not a good setup. This is if you want to blow up. That's a good setup if you want to blow up. Ooh, okay, yeah. The good thing is, it's very easy to fix your problems because your setups and entries are pretty much like the setups you trade are mediocre is being generous. So you bought here for an EP bounce. Okay. This is not, there is no such thing as an EP bounce. You bought it here, sold it here. The setup wasn't that great. It wasn't a great setup. KT, you bought it here. That was a shitty setup. Yeah, like these are like broken. Like a lot of these broken momentum stocks. You bought it here, got stopped out. Again, it wasn't a great setup. It was wide and loose, and there was no higher lows, and it's just a broken momentum stock, some random pump stock. UVXY, I'm not even gonna go through UVXY. None of you should be trading those things unless you really know what the hell you're doing. You bought it here. And you got stopped out here. It wasn't a clean setup. Like, they're not great setups. They're not great setups. Focus on flags. Like, this is a good setup. Okay, this is a good setup. When you just break out of clean ranges, these are all just, you know, fantasy trades. Just a random range break and you hope that they're gonna go to the moon. A broken momentum stock. There's nothing here. Bought it here, sold here, nothing here, bad setup. I'm gonna show you a good setup was on SPWR. This was a good setup, clean range break. This was a good setup, clean range break, like clean flag break, because something buying, you know, down here. I mean, it looks like shit. Where's your edge? Like, there's nothing there. MSTR, you bought it yesterday, got stopped out. It wasn't a good setup. Just easy as that. Just a random bit, you know, no, nothing there. I'm gonna show you a good setup. Okay, where is it? This was a good setup. Wait, here. This was a good setup. It had been showing relative strength. The market was pulling back during this time. Bitcoin pulled back to the 50-day. This MSTR surfed the 20. It showed relative strength. That was a good setup. That one I traded. Down here yesterday, it was just a random. It didn't show any relative strength to Bitcoin. It was just a random broken momentum stock. 2 winners and 28 losses. Yeah, and you would have avoided, out of those 28 losses, you would have avoided 20 of them if you had focused on like really good setups. So most of the issue was just, you know, trading mediocre setups. That's the issue. Like, not a good setup. This goes against anything I teach. Like, you know, it needs to be tight. Needs to be breaking out of a tight range, and preferably maybe, you know, breaking out of a moving average. Not a good setup. That's an easy one. Shitty setup. entry here. Again, it's not a good setup. Like, it's just a random stock, and you know, there's no setup there. I mean, yeah, clearly, like these are really shitty setups. Entry here, another one. Like, what the hell? What is this? Like, is this a tight candle? These 3 previous days, are these tight days? What the fuck is this? Come on. Not good. Shitty setup. No setup. What's the next one? See, like, these are so easy. There's such shitty setups. Again, I mean, what is this? Does this look like a good setup? Like, this was a decent setup, okay? Momentum stock, it pulled back to the 50-day, had another pop, pulled back, found support on the 50-day again, built a little bit of a range, some higher lows, and then broke out of this pullback range. Like, that was an okay setup. Like, what the hell is this? It's just a continuation move. Like, it's not a setup. GPRO, 9th of April. Okay, this wasn't a good setup. It wasn't. Like, I would personally have wanted more sideways. It wasn't a great setup. It was okay, but, you know, mediocre. And, you know, when you do mediocre setups in a not a great market, in a market that's not straight up, this is what happens. MTX, 9th of April, 9th of April. Why? Is there a setup here? 9th of April. No setup. GoPro, 9th of April. Yeah, it wasn't a good setup. I know someone else traded it too on the Struggling Trader review. Yeah, it's not a good setup. It's not a good setup. It's more of a range. KOPN, 9th of April. Again, like, what is this? I mean, not a good setup. You need more of a range. Well, this is easy so far. None of these are easy setups. Easy setups. They're all shitty setups. GPS, 8th of April. Absolutely no setup. Again, like, there's no setup there. Like, this is not what a good setup looks like. 7th of April. Again, there's no setup there. Like, it's been grinding higher for like 3-4 days. Like, why do you buy it here? Just a random up day. Really need to spend a lot of time, you know, understanding what's random and what's not. 6th of April, again, it's just a random, like, well, there's nothing there. Probably shouldn't be trading. If you're watching this right now, you should stop trading and just study setups. Because at this rate, this is very bad. Saber, 6th of April. Am I reading this right? Like, okay, 6th of April. And also, you're doing a lot of trades. You're doing like 4 or 5 trades every single day. Stop it. No more than 1 trade per day for you. No more than 1 trade per day. You're gonna blow up so fast. Holy shit. Again, I mean, what is this? Like, what do you see here? No. 7th of April. 7th of April. Like what do you see here? Is there a setup here? Does this look remotely anything like I teach? And again, it comes down to very simple things. People, or most of the people so far I've done their Struggling Trader review, they don't have a basic concept of a good setup. And it's very simple to fix that. It just takes a little bit of time. MSTR, the 9th of April, I really don't see anything here. It looks super random. It's below the 50-day, below, like, all these, it's no, not a good setup. Too random. Focus on the ones that are surfing the rising moving averages. Lisi, I don't know. I don't see anything in this one. It's just too random. There's no range here. 6. No, not a good setup. What is this? What is this? It's just a random day on a random stock. No, you focus on nice and tight. Nice and tight. Needs to be nice and tight. A better setup would have been on this day here. Okay, when it actually broke out of this narrow range. 10. Oh, absolutely. Like, what's the setup here? Wait, you traded it. What are you doing? You traded it 3 times the same day? There's no setup here. Where's the range? Is it surfing the moving averages? This is just a random day, and you took 3 losses on it that day. That's what happens when you trade random things. BBW, 14th of June. Again, not a setup there. Look at the wideness of the previous day.
TNR 14th. Again, like, why are you buying something like this? Look at the wideness of the previous day. Look for nice and tight, not wide and loose. 7th. Oh, no, horrible setup. No. And again, where's the momentum on this thing? It's sloppy stock. It's all over the place. It looks like a barcode. It's not a good stock to trade to begin with, and it wasn't a good setup. And this is just a random stock. Like it's where's the setup? 8, like why? Like what is this? Like is it nice and tight, or is it wide and loose? Where's the range? It's just a random day on a random stock. Again, like this is not a setup. Why would you buy it here? Like it was a good idea, big move, but it needs to go sideways a bit more. Just let the 10-day catch up, Let the 10-day catch up. Don't be so eager to get in on some random stocks. Just let the setup develop. 10th, not a good setup, no. ADR 3.8, you shouldn't be trading this thing. And there was no setup here, like it's just a random update on doesn't look like a good setup at all. 29th of April was the entry. Why? I don't see anything. It's just a why did you buy it here on this day? What's your edge?
Like the market was kind of in a correction type of a thingy, right? Russell too, Nasdaq, Russell. Well, Russell was okay, but yeah, it wasn't good for a good market environment. That's why it failed, and now it's down way big since. And also, like all of these trades there from like March, like breakouts were tricky. March was a very tricky month for breakouts, so that's where there's so many fails. Again, March was a tricky month because a lot of the speculation money kind of flowed out of the market. The speculation money that came into the market November to February, most of it, it went away in March. It was an okay setup, and the whole sector was kind of strong, but it just didn't work out. Again, March, what can I say? It was month of March. Yeah, not that great of a setup. I think I traded myself. Or actually I don't know. It was okay, I guess. It just, again, what can I say? Month of March. If it had been in January, it would have gone to 30. I mean, it was a solid EP. And if it had more volume, I would probably have traded myself. It just didn't work out. The setup was decent, I guess. But again, month of March. If this had happened in November, December, it would have, it would have done this without stopping you out first. It wasn't a bad setup, but it was, bad market. Not a great market for these smaller cap stocks and biotech stocks. So setup itself was maybe 3.5 star. It was okay. Mediocre. And when you do mediocre setups in a not a great market, in a market that's not straight up, this is what happens. I guess it was an okay setup, but it kind of obviously failed in a big way. That was near the peak of the SPAC market. You can see why it failed, because Nasdaq pulled back. Nasdaq had a big run, multi-month run. And you want to buy breakouts when the market, the Nasdaq I think is the best index to follow, comes out of a multi-month sideways consolidation or a multi-month sell-off. Here, good time to buy breakouts. Here, not so much. And that's why it's failed. The setup itself was pretty, was okay. But, once the market is straight up for multiple months, you gotta be careful buying breakouts. You should have already, bought breakouts for many months. But yeah, it was a good setup. But, again, like I said it before, like there were a lot of micro caps that had these types of setups. Bingo was one. Like Bingo. Back in mid-February, these micro caps that were up thousands of %. You have to understand, like, they're not gonna go up forever. Like, this thing was up 1,700%, 1,600%. And yeah, the setup was great, but again, the Nasdaq crapped and all of these things went down. It was a high-tide flag, gapped up, but again, late February, market was kind of soft. It had already, like the 10-day had started sloping down. When is the best time to buy breakouts? Chat, come on. Come on, chat. When is the best time to buy breakouts? What do we want to see in the moving averages? After correction? Yeah, but the moving averages. When the 10-day is above the 20-day, yeah? More. Rising 10-day, 20-day. We want to see the 10-day above the 20-day, and both the 10-day and 20-day need to be rising, or one of them can be sideways, but at least one of them needs to be rising. That's when you have good conditions generally for breakouts. Not a perfect indicator, but like in late February, the 10-day had started sloping down, the 20-day was sideways. Actually, in late February. So that was a warning sign that you shouldn't buy breakouts. Like Twitter, Twitter did look good. Like if I compare this setup, I'm gonna show you guys. You just see this setup. Big move, found support on a rising 10-day, and building high tight flag. Next day gaps up, but in this case it crapped and it never went higher. Now let's look at something like NIO. I'm gonna show you. Similar setup, fairly similar setup. Something like this. Big move, pulled back to the 10-day, started building a flag, and it went straight up. Why did it go straight up? Well, because the market had just come out of a multi-month correction, and that was the start of a multi-month move. And NIO had shown strength all the way. That's a good time to buy breakouts, when the market comes out of a multi-month sideways or multi-month correction. Not when the market has already run for 2-3 months straight up and it's starting to lose momentum. Not a good time to buy breakouts. And again, the market was, started correction. Speculation money started leaving. Like when did I go short Plug and Tesla? Yeah, early February, that's when we started seeing these danger signs. Late January. Pretty much, some of the setups were good, but again, the market conditions weren't good. Actually, I have to say this guy had the best setup so far, but again, like you need to have market awareness. Very important. You just can't keep doing the same thing over and over again. You have it's not that easy. Good setup buy. No, you need to be aware of the market conditions. He says entries, his setups were pretty good. Like they were actually all of the setups pretty much were pretty decent and actually very good, but the market was bad during the February era. Ugly market? I mean, look, if you're in the right stocks, it's not ugly. The large caps are working fine. It's not straight up, but if you're in that select large caps that are working, it's fine. But yeah, the micro and smaller caps have been struggling. The setup itself, it was surfing the 50, was in an uptrend. It was actually a pretty decent setup. This is a good setup. There's nothing else to say. Very orderly and got tight, was surfing the 50-day, building higher lows. Very good setup. It just didn't work because the market was pretty shitty. This is what I'm saying, that one stock that looks good and is breaking out, it's usually, it's a fool's game. You want to buy breakouts when there's a lot of setup, when a lot of things are breaking out. You're feeling you're missing out. You're passing on 4- and 5-star setups because there's, only so many things you can focus on. That's what you want to see, not something like this. There's just one random stock that looks good. And now people are like, yeah, but they had an offering. It doesn't matter. In a good market, the stock would have been 5% higher. It's failing because it's a shitty market, not because it had an offering.
Buying something like this mid-March, one of these speculative hype pump stocks, it failed because the speculation money left. Mid-February, late February, that's when the speculation money left. And no one's been willing to buy. All these SPACs, all of those things faded and faded and faded. And it's the same with these many of these crypto miners and stuff like that. Now, again, mid-March, you shouldn't have bought any breakouts there because, the 10-day was below the 20-day and the 20-day was sloping lower on the Nasdaq. But this didn't work for a few days and then it went to shit. Again, it's a good setup. It's a good setup, but again, mid-March, don't buy breakouts in a condition like that. I'm telling you guys, the 10 and 20-day, put them on the major indices. I think Nasdaq is the best one. On Russell, you can use too. Nasdaq and or Russell. Most of the stocks you guys are gonna trade are gonna be in the Russell. Use the 10 and 20, okay? If the 10-day and 20-day are sloping higher and the 10-day is above the 20-day, that's generally a good time to buy breakouts. And if those conditions are not met, it's generally not a good time to buy breakouts. It will keep you in most of the good markets and it will keep you out most of the bad markets. Again, mid-March, Mid-March. That's the thing. Don't buy breakouts in a APTO here too. Late March. Like, these types of setups worked really great, like December, January, February. But when you want to buy, if you're gonna buy any type of these micro cap, you know, these big flyers, you gotta ask yourself, have they been working recently? If the answer is yes, go for it. If the answer is no, pass on it. PSD. Yeah. So late March, the 10-day was still sloping down and the 20-day was still sloping down. So, you know, still not a time you should be buying this many breakouts. It's not like he bought one or two. He did a lot of them. Like, I'm skipping a lot of these stocks. Like, I'm just skipping like 10, 15 because he has so many in his... Most of those setups were okay. Or maybe, no, not most. Maybe half of them. Half of them were shit. But the market conditions. Like, literally, you shouldn't have done none of these trades, really. All of these were like March, I think. Or from mid-March to mid-April. If you just had, you know, followed the 10-20 average rules on the Nasdaq and Russell, you would have saved yourself a lot of money and headache. Market conditions are super important. Any idiot can learn a setup. The hard thing is to realize when it works and when it doesn't. That's the hard part. That's what takes time, you know. What works in January won't work in March. Market environment matters. And also, remember, the Nasdaq was also in a downtrend. It was below the 20-day was sloping down, the 10-day was sloping down. So it's not really a great environment to buy breakouts. That's why I've gone through many times. These moving averages are sloping down. And even here, where it had a great setup, it failed because the market was kind of so. But I see what you see. It's a kind of a tight flag, you know, nice trend, surfing the 10-day. I see what you see. But, you know, these types of setups in a market like this, not really tough. Yeah, best time to buy breakouts is when the market comes out of a multi-month range or comes out of a multi-month correction. That's when you usually get free money when it comes to breakouts. But again, since like mid-late February, breakout trading has been a very tough game, and it's just part of the game. You gotta wait it out. That's how trading is most of the time. You gotta realize it and accept it.
Not a good setup. This goes against anything I teach. Like, you know, it needs to be tight. It needs to be breaking out of a tight range. And preferably maybe, you know, breaking out of a moving average. He bought it here. What the hell is this? Like, it's a down trading stock. Like, what are you seeing here? Is it surfing any of these moving averages? Like, there's nothing there. Shit setup. It's just too random looking to me. It wasn't really surfing the 50, any of the moving averages, and it's just too random. It did work out in hindsight, but it's not really a great setup in my opinion. Again, I mean, what is this? Like, what do you see here? Like right now, Saber is a good setup. It's a tight range, surfing the 50-day, and if it has a breakout here, it would be a decent setup. Now, the market is kind of so-so, but like that's what you want to look for when they kind of surf the 50, the 20, and then break out of a tight range.
STR the 9th of April, I really don't see anything here. It looks super random. It's below the 50-day, below like all these. It's no, not a good setup. Too random. Focus on the ones that are surfing the rising moving averages. Avoid these types of setups. It's focus on the ones that are surfing the. In this case, it was like a mid-cap stock. Like I taught you guys, if you watch the swing trading school videos, focus on the ones that are surfing the 10, 20, and 50-day. Like these types of setups, they're not good. You know, it was far away from the 10-day. The best ones are when the 10-day or the 20-day catches up to price. This type of setup, no, not a good setup. No. It needs to be surfing the 10 and 20. This thing was below, and no, not a good setup. Wait, you traded it? What are you doing? You traded it 3 times the same day? There's no setup here. Where's the range? Is it surfing the moving averages? This is Just a random day, and you took 3 losses on it that day. That's what happens when you trade random things.
Why do you want to go long this thing? If you can just explain what you see in the trade. Big volumes, that's it. But it's going down. I think you're gonna see better results if you only buy stocks that are going up. Like if you look at the NNDM chart, it's down on the day, and it looks like it's about to break down on the 60-minute chart. Like, what's your stop gonna be if you buy it here? What's your out gonna be on NNDM? 240? I mean, the best advice I can give you is, you know, buy stocks that are going up, that are breaking out. I don't think this is a good setup. I see what you see there. It's a momentum stock, it's flagging, but I think you would be better off if you just waited for a setup to build. The best advice I can give you guys, both buy stocks that are going up and short stocks that are going down. Don't try to find tops if you're shorting or bottoms if you are going long.
I'm gonna talk to you. This is what trading is all about. I bought it on the opening range highs. I actually chased a little bit. 29.40 is my average. This is the 5-minute chart. So I bought it on this gap up when it broke out of its long range. My risk was 40 cents and I'm almost up $4 on it. So I'm up about 9 times my initial risk on this thing. And this is what trading is all about. You can be wrong 7 out of 10 times and still make money. You can be wrong 8 out of 10 times and still make money. And that's what you saw in the first couple of weeks of streaming. I took a lot of small and medium-sized losses. I barely had any big winners. And now I'm starting to get some big winners again. So, you know, I can have 10 losers in a row and lose 100 grand. And then I have one winner and I'm up 100 grand. And if I have another winner, then I'll be up 200 grand, 300 grand. It's all about risk reward. You need to find the scenarios where you can get great risk reward, and then you just have to sit and wait. Do nothing. First you wait and do nothing and find your setups, and then you buy or short your setups, and then you wait and do nothing other than maybe scale out and move your stops. So now I'm starting to get some nice runners after a very, very cold let's say mid-September to mid-October. I was very cold, and now the past week and 2 I've gained some traction again thanks to the markets breaking out. And that's what trading is all about. There are good times and there are bad times for every type of trader.
VCP pattern. VCP pattern, it's another name for tightening range. It's another VCP. Do you know what it stands for? Volatility constriction pattern. Okay, I call it higher lows. That's it. Tightening range. That's what VCP is. I'm gonna show you a VCP pattern. Okay, like look at something like Tesla. Okay, so this is what Mark Vinerini does. He looks like the first drawdown, this first pullback, 34%. The next pullback, 24%. This third pullback, 16%. Okay, that's called a VCP pattern. Okay, volatility constriction pattern. This is what it does, and then there's this breakout of the pattern. I call it. I make it a little bit simpler. You don't need to put fancy words behind simple concepts. I call it higher lows and just tightening range. That's it. That's what VCP pattern is. Boom. No need to pay $4,000 for his trading seminar, but his books are great though. Yeah, this is a good setup. I think if it can go have an inside day today, like it had a pretty white day on Friday, if it can go sideways today, build some higher lows, then this thing would be a 5-star setup for tomorrow. This is a high tide flag. Big move. This is a momentum leader. ADR is 15%. That's extremely high. Not a lot of stocks have ADRs that are that high. Acre was a decent setup here. Made a big move, went sideways, started surfing these moving averages. You can see it started building higher lows. It was a decent setup here. Yeah, it looks decent. This one looks decent. Like it made a big move, right? It keeps surfing the 20-day and it's been going sideways for about a month, 2 months or so, building higher lows, surfing the 20-day. This is a good setup if it starts breaking, and it's the hottest sector. It's a COVID-19 sector. High ADR, 9.3%. This could be a good one. It had a good setup on this day here. Now it probably needs to go sideways for a week. No, it's too choppy. It needs to be a cleaner setup. AutoNation, look, it's a good setup. Like this is a good setup. The only problem is ADR is 3.8%. Most of you should focus on stocks with ADR over 4, 5, 6%. But it's a good setup. Don't get me wrong. It's a good setup. Blink. Well, a few days. It needs a few. LRN. No, there is no secondary setup here. If you missed it on, what is it, Thursday, this was a good setup. Right here, on this day here. It made a big move, pulled back, went sideways, started building higher lows, and then it had a breakout here. But this breakout didn't have much follow through. This is like a 5.5 star setup on a 5-star scale. Makes a big move, goes sideways, surfs the 20-day, and then it kind of loses the 20-day here, but it's still building higher lows. And then you have this tight range that breaks and a high volume breakout. Okay, this would have been a setup. Okay, this would have been a setup. It makes a big move, surfs the 10-day, builds higher lows, takes out this range, and it has a narrow candle before the breakout day. Sell H, this one has a couple of good setups. Like one is right here on this day here. Makes a big move, surfs on the 10 and 20-day moving averages, starts building higher lows of the 20, takes out this tight range. This is a nice little high tight flag. This is a very good looking setup. This is like a 4.5 star setup. Look at how cleanly it bounces off the 20-day, and then it has this tight range here. Just keeps building higher lows. This is a very good setup, but it's a day before earnings, so you shouldn't have bought it. This is a really good setup. Makes a big move. It is kind of choppy in this range, but it gets tighter and tighter. Builds higher lows, goes from surfing the 10-day moving average to surfing the 20, builds higher lows, has this range that gets tighter and tighter, has a really narrow range day, the day before breakout, and then it breaks out on high volume. This is another one. I traded this one. Unfortunately, I didn't follow my own sell rules. I got stopped out on this day here. Even though I shouldn't have. I anticipated that it would go lower, so I sold it a bit too early. Ivana had several, or at least 2 really good setups. One was here. Again, big move, surfs the 20-day, starts getting tighter and tighter, builds a range, higher lows, gets 3 tight range candles, and then a breakout. And here's another good setup. Like it's just the same theme, like a big move, pullback or sideways consolidation, and then the stock starts finding support and starts surfing one of the moving averages. CWH, this one had I guess an okay setup here. I would have preferred maybe a bit more sideways. It wasn't really that obvious of a setup. Here I see a really good setup back in April. This is a good setup. This thing makes a big move. Okay, goes up it goes up more than 200%. Pulls back, finds support on the rising 20-day, builds a tight range, and then it has a high volume breakout. This is like a 5-star setup. Like this one, already marked it. Like I've told this one, very good setup. This one too, very good setup. Fastly, 5-star setup right here. Fiverr had a great setup. This is a 5-star setup. And then you had the okay setup here. IBIO, there was a good setup here. Like this stock actually broke out late day. It gapped up and then it went sideways for most of the day. You can see it on the 60-minute chart. This thing didn't take like the 258 was the highest of the day until late day when it broke out on high volume. So 258